Will silver finally find its legs in 2024? Is Trump a risk to the global economy, or is he the solution to our problems? And finally, what is the dragon baby rush? We'll discuss this and more with analyst and author David Morgan from the Morgan Report on today's episode of Inside the Vault.
Welcome to Inside the Vault with SWP. Join Mark Yaxley as we explore the latest news, reports, and some bullion basics for investors old and new. Let's get to it.
Hello, everyone, and welcome back to Inside the Vault with SWP, a weekly show where we dive into the world of precious metals and macroeconomics with the brightest minds in our space. Our regular host, Jeremy Varlow, is off today, so I'll be sitting in for him. I'll be joined by a legendary precious metals analyst, author, teacher, and founder of the Morgan Report, Mr. David Morgan. But first, we've noticed recently that roughly half of you guys enjoy watching our podcast, but haven't yet subscribed to our YouTube channel. So while you're here, make sure to hit the subscribe button and leave us a comment or a question, and we'll be sure to get back to you. Before we speak with David, let's kick things off with our weekly market update presented by yours truly. So this week, quite a bit going on in the world of gold and silver. We still have our eyes on the global geopolitical situation. The risk level remains high with both Russia and Israel carrying on with their military missions undeterred. Russian President Vladimir Putin recently sat in an interview with Tucker Carlson and said that Russia has not yet achieved its objectives in the Ukraine and will continue its fight there. Meanwhile, Israeli leader Benjamin Netanyahu is pressing on, now commanding attacks in the southern city of Rafah, where as many as 1 million Palestinians currently reside. Turning our attention to domestic affairs, Donald Trump and President Biden have been making quite a few headlines of late for different reasons. Biden has been defending his age and ability to lead for another 4 years, whereas Trump has reverted to some of his usual tactics, criticizing America's foreign policy. Although the U.S. presidential election is still months away, scheduled for November of 2024, analysts worry that if Trump is reelected, he could permanently damage relationships with some important NATO allies and potentially China, reshaping the global economy and adding to the political turbulence. Certainly a campaign trail to keep an eye on, folks. American investors are also keeping their eye on the regional banking situation, fueled the past 2 weeks by the struggles of New York Community Bank. Although the bank's shares have recovered in the past 2 trading sessions after a loss of nearly 60%, analysts fear that the recent headlines may have stoked a renewed run on smaller regional banks. This situation does resemble what unfolded with regional banks in early 2023, but this time instead is fueled by balance sheets heavily invested in commercial real estate. The US dollar index remains high at 104.80 at the time of this recording, putting pressure on gold and silver. I always mention this, folks. Keep your eye on the strength of the US dollar. It correlates directly with the price of gold and silver. The LBMA recently published their 2024 annual precious metals forecast. They polled 30 leading precious metal analysts and asked them what they thought the average price of gold and silver was going to be for the year of 2024. The consensus that came back was that gold's average price would be $20.59 an ounce in US dollars. That's about 2% higher than what it's trading at currently, and 6% higher than the average price in 2023. On silver's side, the average predicted price in US dollars was $24.80 an ounce, roughly 8% higher than where we sit today, and again, 6% higher than the average silver price in 2023. And I will ask David in just a few moments about his opinion on those predictions. And finally, I like to end on a little bit of a lighter note. Gold jewelry sales in China are expected to rise by as much as 30% during this Chinese New Year season. And that's because, quote, many people are trying to get married and have babies in the year of the dragon. So culturally speaking, this is a very important year for the Chinese. And according to the Chinese Gold and Silver Exchange Society, jewelers there are stockpiling gold jewelry that is dragon themed, and they are calling this the dragon baby rush. So that's positive news for the price of gold. That wraps up this week's market update. Now we get to jump into a discussion on precious metals, geopolitics, and macroeconomics with none other than David Morgan, who is the founder of the Morgan Report. David is a long-standing, respected member of our industry. I mean, so long as I've been involved in precious metals, David has been there. He's always been one of the statesmen in our industry. He's also an author and a teacher, which I like. He's always got a lot of knowledge to share. So, David, welcome to Inside the Vault. It's been a few years, but good to have you back.
Well, Mark, thanks for having me back. It's been too long, and thank you for the kind introduction.
Awesome. So before we jump into the current state of affairs, David, I wanted to just take a quick peek in the rear view mirror with you and talk quickly about 2023. Gold was up 10%, over 10% in 2023. It's, by all accounts, a pretty good year for the yellow metal. But silver lagged and actually finished the year down about 1%. Typically, the two metals do generally trade on the same trend line. So my question for you, someone who's written about silver a lot over their career, what was the reason for silver's lack of performance in 2023? And should we expect a different outcome in 2024?
Yeah, that's a tough one, Mark, especially, trying to keep the tinfoil hat off of my head. But I think gold was up 13%, silver's off 1%, as you said, not to quibble about the numbers. Two things. One is gold is really an establishment metal. Now, you're not going to hear that from the Wall Streeters, or you're not going to hear it from the mainstream financial press, and you're not going to hear it from Jim Cramer. But all the central banks own gold and have been buying gold at a rapid rate in 2022 and also in 2023. But gold has been demonetized, and you could argue from 1873 onward, certainly from 1965 onward. And there aren't any banks in the world that hold silver as a monetary asset. So there's that going against silver. On the positive side, silver, it's deemed to be an industrial metal only. I disagree. I think it's industrial and monetary. But regardless, the demand comes from private investors and the industrial side with some institutional support. The reason it didn't move in 2023 was there was no institutional support for silver. There was a lot of institutional or banking support for gold. Mm-hmm. Now, if you go back to 2020, the silver price moved substantially, and the institutional side of silver was 320 million ounces on top of about 200 million ounce requirement for retail demand, for a total of over 500 million ounces, 500 million ounces in 2020. What happened between 2020 and 2023? Well, this is where the foil hat conjecture speculation comes in, because the answer is I don't know. But I suspect that some of the main institutional players are gone. I mean, if you go back to the WEF, or Davos as it was called in the past, Scott Maynard of Guggenheim, who was the chief investment strategist for Guggenheim, when asked by Bloomberg's financial guys what was his go-to investment in 2020, he said silver. And the guys almost fell over, and they said, silver? You could see it in their body language. And he said, why not gold? And Scott Maynard explained that gold was pretty near its all-time high, whereas silver was off 60%. Mm-hmm. And whether Guggenheim bought 320 million ounces of silver or not, I have no idea. I suspect they bought a pretty good amount. So that's the answer till we get really big buyers in the silver market. Now, I'll leave it there and hand it back to you, but I got some ideas when you cue me on, where the prices are going to go this year and beyond.
Yeah, well, that's where we're headed next, David. So I'll just remind our viewers, the LBMA, which is a widely respected, not a governing body, but an influential body in the precious metals space, just published their annual metals forecast. As I said, the predicted price for gold, now the predicted low ranged between 1780 up to 2405, with the average price predicted at 2059. Sticking to silver, the average price that they predicted was 2480. I think the high came in at 32 and the low is like 18. So, they've got it pegged at about roughly 8% higher than we are today, 6% above 2023. But I'd love to hear your thoughts on what you have in mind for 2024 for silver.
Yeah, thanks, Mark. So it's in print. It's in print in my private newsletter. Not that I haven't said it on interviews previously, but so I looked at it, and I'm actually fairly conservative. I mean, people can have whatever opinion they'd like. So I looked at the 13% in 2023, and I said, well, what would 13% do in 2024? With factoring in that nothing seems to be getting better on a fundamental basis. I mean, things that move, markets and the precious metals in particular, the bombs move markets, political uncertainty move markets. I mean, 80% of the world's nation states have a new leader election this year. I mean, that's profound. I wrote about that in the Morgan Report. Regardless, so I looked at another 13% on top of the high, and so I got to 2,500 as my max. My min is somewhere around 2,250. I didn't expect it to end the year at 2,500, but who knows? And I always have to give the caveat, Mark, as I'm sure you probably do, and this is bearing a black swan. I mean, this is bearing a cyber attack of significance that takes down a money center bank, bond default by a major nation state, that type of thing. And of course, we can't rule those out. In fact, we have more and more pressure in that direction than ever. So on silver, it's even more difficult. To me, watching the markets as carefully as I have, especially the metals and the commodity sector, it looks like there's a big defense at around the $30 level. And there's no reason silver shouldn't be $30 today, but it isn't. And I forecast so we could see that level. I think it's going to be very difficult to get through that level, but I do believe it will. Whether it'll do it in 2024 or not remains to be determined. There's stepping back and adding on to the answer. The late, great Jim Dines, who I read on and off for 40 years or something, had a theory that was a confirmation theory, just like the Dow theory. So silver had to confirm gold's move. And really, it hasn't done that. I mean, for silver to confirm gold's move, it would have to go, and it's an art, not a science. Would it have to make a new high? No, but it would have to be like in the 30-ish range in how I look at this confirmation. I think it'll come, but it's been very, very trying because of the fact that the use of silver continues to increase, and we've seen things happen that are unusual. Meaning, with the gold move and the algorithms that play off each other in an 85% correlation gold to silver until recent, when we saw these very tradable moves in the silver market and very little participation on the institutional side, and seeing what the institutionals play, which are the ETFs, diminish in their physical holdings, that leaves one scratching their head. Why do we have this fundamental setup that's a gimme for a $2, $3 move that's happened a few times in 2023? And yet very little participation. And at the same time, what counts the most, the physical supply is being drained off of the ETFs, not into the ETFs. Whereas if you go to Big Brother Gold, the opposite is happening. Again, it leaves one scratching.
It does. Yeah, you're right. I mean, for the amount of time that I've been in the industry, the two have really run in parallel most of the time. And this is one of the first times, notably, like you said, 13% increase for gold, 1% decline for silver. I haven't seen that over an extended period of trading days, in my entire career. So it does leave one scratching our head, and we'll keep a close eye on it. We'll talk about silver a little bit more. I had originally written a question for you, and I like to ask people this question, because we do this for a living. You write a newsletter, we help people acquire precious metals, and you get in, we wear a salesman hat in that sense. We run in businesses, and obviously there is somewhat of a company line that gets thrown into that. But, we also have families and friends who come to us for advice. And I'd originally written a question to ask you, hypothetically speaking, if a close relative of David Morgan were to ask him today, is now a good time to invest in precious metals, what would you say? But I think I know what the answer to that is based on what we've already talked about. The question I'd like to ask you now is why a close relative should invest in precious metals today.
Political uncertainty. I mean, all the fundamentals for uh, having a hedge position. Certainly, you don't have to put your life savings into precious metals. In fact, I still would submit that that's foolish to do so. But nonetheless, to not have an exposure to precious metals is also foolish.
Mhm.
So if you don't have a position always, I mean, I have a niece that bought silver on my recommendation, not gold, and she's upset. She doesn't understand what's going on. Well, two reasons. One is geopolitical uncertainty. Second is all fiat fails. I know I've said it almost every interview, but it's true. And even though the dollar is strong, it's strong relative to what? All of their currencies. Why? Well, two reasons. One is that we're able to export inflation. We, the United States, is able to export inflation to all other countries. So they have to inflate to keep up with the depreciation of the currency on a global basis. And then some depreciate at a faster rate. So if you're destroying your currency faster than the US dollar, then the dollar index will look stronger than you because you're printing more worthless units faster. So because of those facts, and we don't know the timing, it's good to have a physical position that is the right amount for you. And I still submit for most people, that's probably 10%. Although if you do the math, it's more like 20%, 25%, although that sounds extremely high. It's
Mhm.
been because of the uncertainty of the financial system since 1971, 50 something years ago, when we destabilized the entire world monetary system based on the fact that it floats. It's an unknown. It varies on a daily basis. And the foreign exchange markets are nothing more than one large giant casino. So we're in a new territory. We've been here before in monetary history. Fiat's always failed. It's never failed to the extent that this one could, because again, we're all interconnected through the reserve currency.
Yeah, and it's an interesting point. You touched on the allocation of 10%. You and I must have read the same report because I remember reading or looking at some data that suggested it's closer to 20%, between 18 to 22%, I believe the figures that they printed. But again, even if you have nothing today and you need to start somewhere and have some precious metals in your portfolio at all times, especially if you can't time it, but ahead of crisis, conditions or major events. And again, the timing is always the issue there, is you don't know when these things are going to happen. But as we've seen, since 2008, you had the major financial crash, globally. Then we had COVID in 2020. We had two major conflicts, one in Europe and now one in the Middle East in the last, 18, 24 months. So if that doesn't tell you, aside from history, do some reading, but if that doesn't tell you that these things do happen, financial crises do happen. We had a banking crisis. We had the Canadian government enact the Emergency Act, on no notice and really without the need to do so. So all these things do happen. And I think for a lot of people, they like to turn a blind eye to that. So, having that initial allocation of 10% it definitely makes sense. Now, let me just follow up, David, quick one. We talk about gold and silver a lot. You can't forget about the platinum group metals, although they've struggled. They've struggled tremendously over the last 12, 18 months. What's the allocation or what's the split that you usually recommend, just generally speaking, between gold, silver, and the platinum group metals?
Well, when you join the premium service by paid service, there's a document called How to Use a Morgan Report. And the first thing I address in that is what's your physical allocation. As you know, I'm not a bullion dealer, but I've always advocated, real metal first before you join the Morgan Report, because we look pretty much at the ETFs and primarily the equity market with a special subset on the mining sector equity side, which has really been lucrative to us. Uh, for example, if you bought gold in September 2011, it was 2000 roughly, and now it's 2000 a round trip. But if you bought my favorite royalty company, you'd be up 400%. So that'd be like gold being at 8,000. Now, I'm not advocating that you drop your gold position to buy equities, and certainly you got to buy the right ones. But anyway, it's a shameless plug in a way, but also the truth, because there's a lot of information out there that's valid if you look on aggregate. If you put them all into a whole, divide by the number that you use to get the the addition, you're looking at an average, and the average is that gold has outperformed gold
Mhm.
equities in that case, but not in all cases. So my allocation depends on your age. The older you are, the more you favor gold. Silver is more volatile. And going back to my niece, I would have said buy gold, don't buy silver. She'd be happy right now because at that time, I forget the exact, but gold was probably around 1650 or so. And silver was pushing in the 25, 26 range. So she's at break even. And, I'm just not going to argue with her anymore. But anyway, not to make this personal. So I don't really address platinum in how to use a Morgan report because to me, it's something if you're a real metals head and you have enough money in the sector, you can diversify out. But if I was going to consult with somebody, I would suggest of their total position in metals being 100%, you might be at a 60-40. So we might change that to 60% gold, 30% silver, and 10% platinum. I like platinum for a lot of reasons. And I think it's the safest in the group right now because it's so rare and 70-80% comes from South Africa, and they're a basket case on their energy sector. Unfortunately, there's social unrest, water problems. There's a lot of reasons why the supply could be disrupted. And even if it is not, they're still in a pretty good deficit situation. And then you have the purported hydrogen economy coming to the fore, which right now looks like we'll use a fair amount of platinum, plus platinum substitutes for palladium, which is why you've seen palladium come so far down. I had a spread trade for over a year with short palladium, long platinum, and all platinum basically went sideways for that year. Plus, palladium continued down, down, down. So it was actually a huge success on a long-term trade. So that's your answer.
Okay, I appreciate the answer. Good insights there. Shifting gears a little bit, and not to get too political, but I mean, you're American. You've lived the majority of your life in the United States, and a lot of our viewers are American, and they wonder with the approaching election as it applies to geopolitical risk, which then ties into the price of precious metals. And one of the reasons that people purchase precious metals as a hedge is to hedge against geopolitical risks. So I wanted to ask you, and this is only your opinion, you don't have to disclose, your political preferences here, but if Trump is allowed to run, he does get elected in this scenario, does geopolitical risk worsen or does it improve, and why?
It's like the question of beauty. It's in the eyes of the beholder. But
Right.
let me state for the record many times, I'm apolitical. I dislike both parties equally. As far as the outcome, I would say that it would increase this time. And let me back up because for my own business, when DJT got in 2016 and went through 2020 barely with the new installed participant, the my business really fell off. It went up during the March 2020 illness. But so here's my take, and I can't prove it. Of course, the economy is deteriorated, so people that had money to invest may not anymore. That's definitely part of it. I think the other part is what I call the big daddy syndrome. In my view, you said my opinion, here it is, no shocker to people that follow me closely, is the big daddy syndrome is, oh boy, our guy's there and things are going to get better and I don't have to hedge anymore. Daddy's going to kiss it and make it go away, which is preposterous. There's never been a leader other than maybe on the battlefield, and I'm anti-war, but regardless, that's really led us out of situations. What's happened is the printing press has worked because Keynesian economics will work for a certain amount of time and then it fails. So I think it's going to add to the risk this time, Mark, which is different than what it did in the past.
Yeah, it's interesting, David. We saw the same thing at SWP. I remember leading up to the 2016 elections, we said, wow, if Trump pulls this off, the phones are going to be ringing off the hooks. Everyone's going to want gold. This is, the big upset. And this guy's, depending on where you fall, a lot of people didn't feel comfortable with this guy being in office. And it was, like you said, the exact opposite. All of our Republican clients, said, well, I don't need gold offshore with you guys. Everything is good domestically. here in the US right now. We got our guy in, like you said, the Big Daddy syndrome. So interesting thoughts. I appreciate that very much. And we'll see how it plays out, but it does feel different. You're absolutely right. I'm feeling the same way on this one. It does feel different than it did back in 2016. Sticking to the government for just a second, and love to hear your thoughts on this. It seems like there's a ton of news about the Fed lately. I know, obviously, the interest rates are impactful on all investments, but it seems like I don't know if it's just Chairman Powell or what it is, but there's so many headlines published about the interest rate hikes and the possibility of cuts and the Fed in general. And the question becomes like, do we pay too much attention to this? Are we missing something by paying so much attention to what the Fed does, or should we keep paying close attention, in your opinion, David?
I think we pay way too much attention to the Fed. I think we really need to pay more attention to the physical economy. I think we've got to drive our car down, Main Street and take a look at how many businesses are gone. Look at all the corporate restaurants that have either closed or have curtailed a lot of their franchisees in different locations that are unprofitable. Look at the contraction through retail, generally speaking. Oh, yeah, I know it's the Amazon syndrome. Yeah, that is part of it. But on aggregate, in the whole, it's because there is less growth. Dollars are worth less. People don't have any discretionary income. The labor force is increasing. Well, how does that happen? Well, first of all, because the way they figure it, I mean, the old adage that figures lie and liars figure is part of it. But not to make that case too much, let's just look at a specific. So Mr. X has a $100,000 a year job as a software engineer. He loses it. And now to get back to 70,000 a year, he's working 3 jobs. Well, that has added 2 more jobs to the labor force, but he's not even making what he used to. And he's got to work, 2 or 3 times as hard or as many hours as he used to. Is that a one-off scenario? No. How many are there? I don't know, Mark, but you get the idea that these numbers are ludicrous. The numbers about with the interest rates, and they are important. I mean, the price of money is important, and it should be set by the market, not by any, commander in chief, or I should say, Federal Reserve Board of Governors. And in a way, it's really not. I mean, that sounds a bit ludicrous to say that these days, but it's a discount window that's set, and then all the interest rates come from there. And the idea that raising interest rates is detrimental to gold, it is, if and only if it's above the real inflation rate. The real inflation rate's probably still around 9 or 10% basis shadow stats in the way that the inflation index was calculated back in 1980, or the hamburger index or whatever else you want to look at. Get out and again on Main Street. So we have a very big contraction in the global economy. And because of that fact, that's what we should pay attention to. And no correct interest rate is going to fix that. And that's the real crux of the issue. So interest rates could go higher. I doubt they will. They could pause, which they will eventually. They'll come down probably. But will that be enough? And the answer is no. Now, as far as I'm concerned, we're past the point of no return. There is no, now that the curtain has been pulled and we see the Fed for what they really are, moving these dials back and forth, pushing levers back and forth, and putting on a good show in front of everybody with this great big facade, that's been exposed. And the banks know it, the sovereign wealth funds know it, family offices know it, even BlackRock knows it. And so what's going to take place, we don't know, but it's more uncertainty, more instability, and more basic run to safety, which isn't the currency de jure, which there will be a huge run in the US dollar because it is the most trusted currency. But at the same time, you'll see a run to precious metals. And we've already seen it begin with the central banks. It just hasn't spilled over into the pension funds or into, let's say, the general public, of course, but it will. And once that starts, regardless of where interest rates are, because it could take place regardless of interest rates, that is sort of a signal to all of us to either add to our position, and hopefully, and not necessarily if you already have a core position, you don't have to, but that would be the time to really evaluate what safety is. And there's nothing out there in the equity side or the bond market that provides the safety of money. And gold and silver have been money for thousands of years, will continue to fulfill that regardless of whatever you're told on the mainstream financial press.
Yeah, well said, David. I appreciate that. And central bank buying is something that we've been paying close attention to here. You know, some viewers might tend to criticize the actions of central banks, but I do give them credit on one thing. They're very good at having their fingers on the pulse of geopolitical risk, and they've been buying gold in record amounts and consistently. They've really been providing a floor for the gold price of late. So love your thoughts there. Before we wrap up, I had one last question for you. It's open-ended. I wanted to ask you what else you're working on these days, and any final thoughts for the viewers.
Well, number one, the last part of the question is, my final thoughts are not to stress too much about it. That the human spirit is immeasurable. I mean, and this is non-religious. I mean, the ability of humans to adapt and adjust and work together. I mean, we've kind of forgotten that. We're all addicted to our screens and we're worried about money more than anything else. And it seems as if that's the most important thing, but we are what's important. Our connection with each other's how we reach out. And yeah, precious metals position in my view is extremely important if you have the means for it. A lot of people don't. So then what do you do? Well, maybe you get some extra food or whatever, not to be too gloom and doomy. What I'm working on right now is a documentary. It's called Silver Sunrise. It's at silversunrise.tv. That's the URL. It's about overcoming the stress of money. If you look it up on Google, the number one stressor for people on a global basis is money problems. Mm-hmm. People don't have enough. They're worried about losing their job. They're worried about their security. They don't have any savings. They depleted their savings. Cost for everything from healthcare to groceries is going up, and they stress about it. And when you think about we're the only species on the planet that has to have money to live. I mean, kangaroos don't have to worry about it. The dolphins don't have to worry about it. And I'm not putting the human species into that classification, but you get what I mean.
Yep.
And so that movie is my last probably big effort about money. I've already got I'd say one of the biggest leaders in what I would call the truth movement, and that's G. Edward Griffin. He's already been filmed for the documentary. Soon be filming Foster Gamble of the Thrive movies, Thrive and Thrive 2. He does a great job, in my view, of explaining the hierarchy of how things work on the planet. And if you look at his pyramid of power, you'll find out that politicians are at the bottom. The next rung up are corporations. Do corporations run the political system? Yes, they do. That's why I'm so, emphatic about candidate A or B being a solution. Could they help? Sure, certainly. And could they help in a meaningful way? Possibility. But really, if you got corporate governance and lobbyists and you've got most of these politicians bought and paid for. So part of the movie is what I've stated over and over, Mark, and that is what I call the money powers. Who's at the top of the pyramid? I don't know. I really don't care. What I care about is what effect do they have? And if they can buy the political class across the board and even buy the judiciary now that we have witnessed in the United States, we're in the end game. We're in a game where the truth always matters, but it's been obfuscated. And if you dare speak it, and sometimes you are canceled. Yeah. And, one of my favorite quotes of all time is from the book 1984, George Orwell. Speaking the truth in times of universal deceit is a revolutionary act. So I'm doing the last revolutionary act the best way I know how, Mark. I'm making this film called the silversunrise.tv. I do need donations. I can't fund the whole thing on my own. Maybe some metals dealers want to help me out. Maybe some mining companies want to help me out. I don't know. I'm not poor, but I don't want to give up everything I've worked for just to make this documentary. Although I'm so idealistic, I just might. But that's it. I appreciate your time as always. It's been too long. SWP's done a great job. I won't say I recommend you every time because I don't. I do recommend you. It depends on the client. I always try to do what's best for any given client. Some people need offshore, some don't. Some want this, some want that. So I do what I do best. I really try to dig in my head and heart and find out what works best for them.
Yeah.
But certainly SWP's in that.
Well, thanks, David, for sharing your truths with us today. A lot of knowledge as well. Before we wrap up, I'm going to run through what we call our bullion basics. This segment is designed to just cover the fundamentals of owning precious metals. A lot of the viewers might be new to the space or early in their precious metals journey. You and I talked a lot about silver today, and I just want to take this opportunity to reaffirm on a personal level that a balanced precious metals portfolio should include both gold and silver. And like you said, if you've got, if you're a metalhead and you've got enough capital, you can deploy some of that to a small allocation of platinum or palladium as well. But my message today is really focused on silver. And, we talked about it being an industrial metal with over 100 different applications. I'm sure there are many more now. This is an old statistic. It's been around a while. It's relatively cheap right now, not only in terms of the gold-silver ratio, which sits firmly above the historic norm, but also in terms of, the fact that the industrial demand for silver has been driven down. These higher interest rates for the last 18 months do affect industry. That's impacted the amount of silver ounces that are being used. And I think as interest rates fall and industry should improve with those interest rates falling as businesses borrow more capital and able to reinvest in their businesses, that should help with the demand for silver. So I think that's another reason to be looking at silver right now. And also you've got the benefit of gold rallying. We touched on that. We didn't see it in 2023, but historically, as gold rallies, and we do expect it will rally, we should see it pull up silver. So based on the industrial demand, gold rallying, and gold and silver being at just over $23 an ounce. I've been around silver for 18 years. And I don't say this often. A lot of people ask me over my career, where should I put my money? My first answer is by default, you should be looking at gold. Silver is the trade, have an allocation. But right now, I do feel like the value is in silver. It might be another 3 to 6 months away before we really start to see that return, but that gives you a window to start building up your silver stack. And premiums have come down over the last few weeks, wholesale premiums on very popular products like Silver Eagles, for example, which at one point were like 12 bucks an ounce wholesale. I've come down to $3.50, $4 an ounce wholesale. So an opportunity to investors to take advantage. All right, my friends, that is all for us today. Thank you so much for joining us. David, thank you for your time. Make sure to check out themorganreport.com and silversunrise.tv, David's personal project. I will check it out, David, and flip you a donation. I hope that works out for you. And don't forget to head over to Strategic Wealth Preservation on YouTube and make sure you subscribe to our channel. It helps us, fund our own project here and bring on great guests like David and continue with these educational interviews. So until next week, stay safe and happy investing.
Thank you for listening to Inside the Vault, the podcast that opens the door to precious metals. We hope you learned something new and enjoyed the show. See you next time on Inside the Vault with SWP.